Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Well, the breakdown of that rising channel did not age well, guys. No follow through. Didn't get the follow through. Uncle talk about how we got the breakdown of the channel that's been forming since November, mid-November. Breakdown yesterday. And I mentioned that the bearish follow through would have been to break down the 453.5 level. We had a double bottom right there. With yesterday's breakdown, a breakdown of 453.5 canceling this double bottom would have been the bearish follow through that bears needed, but unfortunately got the gap up, and well, dip buyers came through and they're looking like a bear trap. All right, now we got to look at this context. You know, we got to brush the dirt off our shoulder, keep it moving, and look at this context. What do we have here? Okay, we look at this rising channel, and you know, we can see that, let me see, I think it's this one, parallel channel. We can see that from this rising channel, the support line, we had plenty of bounces off of it. So what am I getting at here? Well, the market makers bounce here, bounce here, bounce here, bounce here, bounce here, and then we finally got the breakdown. And the market makers were setting it up, man. Setting up the dumb money. Thinking that the bounce here could have led to more upside. Because plenty of bounces led to some nice, bounce off the support line, led to some nice up move, decent, $3, $4, $5 moves to the upside from this trend line. So when we finally got that breakdown, I like to refer to that as stop loss hunting. Because looking at this chart, I would assume that the people that was longing off this trend line probably had their stop losses below the trend line. And with the breakdown yesterday, it looks like market makers were able to hit the stop losses of a lot of these people that was looking to long off support. And then what happened today? Well, the market makers didn't just want to trick out the bulls. They wanted to trick out the bears as well. When they gapped back up, let's take a look closer to the context here. You know, Uncle gave you that 456.5 level. I gave you guys the bear case and the bull case yesterday. And the bull case was that above 456 to the 456.5 zone, we were going to have to switch back to bullish. And you can see here we got a couple of bounces, a little tricky. 15-minute chart was a bit noisy. Today I had to push up to a 30-minute chart, but 15-minute chart was a little bit noisy. But overall, gapped up, never broke below 456, never broke back below the rising channel, support of the rising channel. It bounced, smashed 458, pulled back a little bit. Look where it bounced, around 456.5, confirming the gap up, confirming the recapture, and bounced even more, going up, almost hitting that 459 level. I had a target at 460 to the 459.5 zone. Didn't quite get there, but it did got, around yesterday's high, looking like another double top here. So, yep, that's what the market makers did. They tricked out both the bulls and they tricked out the bears. Okay? So, where do we go from here? Well, got to look at this double bottom where there was clear buying pressure, where the strong buying pressure is. And then we got to look at the bigger picture of this other double top. Double bottom on the smaller time frame at 453.5, where there's a clear buy zone. And of course, double top on the daily chart. I'm gonna give it a zone, 459.5 to 460 zone. That's where the double top is on the daily chart. So we know where the sell zone is. Is this a new chop range? Unfortunately, yes. 4 453.5 to 460 is the chop range. Very unfortunate that I have to keep on talking about the chop range. I'll admit I got excited with the breakdown of the rising channel. It's not that I'm bearish. I just want some volatility to return. But as you guys can see, the market don't give a shit about what Uncle Charles wants or what any of us wants. So, the best thing I can say is just trade it unbiasedly. Look elsewhere from SPY if you have to. Today, like I've been saying to you guys for a few weeks now, I've been trading Tesla, and as you guys can see, these lines are my levels. We get some decent level-to-level moves on Tesla intraday, okay? And I do got a Discord where I alert these setups. I give Tesla its own room. I give SPY its own room, but a lot of the, SPY was just very slow, unfortunately. But with Tesla, I had I wrote here 240 is first support with 238 below. And watch for the break of 242 and 244 to trigger more upside. Short only if 240 and especially 238 fail as support. And we're just looking to react. Right here, that was my 238 level. We broke that down. It smashed 238. And I mentioned to the group, to a 240 loss, that's where you want to take profits. But I also wrote, 240 loss, want to watch for the breakdown of 238. If not, calls if 240 recapture. We're just looking to react. If you play level-to-level style with runners, you should have been okay. From 240 down to 238. It went a little lower than that, down to 236.98-ish, but it bounced. And it recaptured 240. It recaptured, 240. False breakdown setup intraday. It cleared 242. And it gave us a level-to-level move up to 244. And when it broke down 244, it gave us a nice level-to-level move down to 242, a little lower, before bouncing again. So you guys can see here with Tesla, it gives us decent level-to-level moves. Breakdown of support, we look to short. Breakouts of resistance, we look to long, and we just play it level-to-level. Tesla moves intraday. Even when it's chopping, it still gives us level-to-level move, as long as you trade with no greed. So that's what I've been doing, just trading Tesla, while SPY has been, moving pretty slowly here. Okay? So unfortunately, that's my new plan. Guys, we have a lot of catalysts next week, CPI, PPI, and my favorite, FOMC, when Uncle Powell speaks. You know how it is when Uncle Powell speaks. Market goes crazy when he speaks, giving us tradable moves. And unfortunately, it's possible that we won't get anything happen with SPY until the catalyst, the data's release. Okay? Now, that's the bad news, guys. The bad news is we're likely still chopping, waiting for the catalyst. But the good news is this. The good news is this. Every time the market has chopped, it does not last forever. Here's a chop. Back in July, it kind of chopped before it gave us that exhaustion gap. I could find you guys more example. Oh, here's a big, nice gap, chop. Remember when we was chopping? That was a long chop phase from April to May. But I want you guys to notice something with every chop phase. Some last longer than others, some shorter than others, right? But with every chop phase, when it ended, it led to a trend move. The April to May chop led to a trend move to the upside. $40 move to the upside. When we was chopping around July and was getting toppy and we had that exhaustion gap, it led to a $20 move to the downside. When we was chopping back in, this was what, October? This is back in October when we was chopping. It led to a very beautiful move to the downside, trend move, guys. Okay? So I'm asking you guys, please be patient. I know a lot of you guys are frustrated with this action, but the trend phase is going to return. And it's very possible it comes back when CPI, PPI, and FOMC all gets released. Okay? So that's what I have for you guys today. Overall, chop range is 453.5 to 460. If we could stay above 458, then 460 is in play, and above that would cancel the double top. Below 458, then of course I got 456.5, 455, and 453.5 based on that double bottom. That double bottom, where is it? Right here, right here. It's from late November. If we can break that down, then maybe we'll get more bearish, guys. Okay? Catalyst is next week. We'll see how this week ends. Just remember the levels I gave you guys. If you guys choose to still trade the SPY, you know, be defensive with your gains. See profit, take profits. And QQQ, though, it recaptured that 388 level. That's bullish. So similar to how SPY recaptured the rising channel, but that's on a smaller time frame, you know. This is a bigger time frame on QQQ. Recaptured at 388 level, July high. And remember, when we initially cleared the July high back in November 20th, the RSI was very overbought. Since, you know, but I mean, technically that breakout did lead from 388, did lead to a $6 move to the upside up to 394. But since hitting 394, we pulled back, and look at that RSI. It's been pretty cooled down. We're back above 388, and we are not overbought like we were back in November 20th. Okay? So it's looking good for bulls right now as long as QQQ can stay above 388. This false breakdown setup, this recapture stays intact. As long as the recapture stays intact or it stays above 388 is, as of right now, it's just looking bullish. If it could drop back below 388, we'll switch back to bearish. Okay? 388 is our equilibrium level. Above it is bullish, below it is bearish. Now if we're above it, watch for that breakout. 390, 392, and 394. 394 was the 52-week high back from November 29th. If we clear that, we can get another 52-week high up higher. All right? We'll see. If we drop back below 388, we're going to get bearish. Same targets below. 386, 384-ish. Probably down to 382-ish. Maybe lower. We still got that gap down to 377. Would be healthy to fill it. But market's going to do what it's going to do. Okay? All I'm saying is stay bullish above 388. IWM had a false breakout. Today it got canceled. Trade setups invalidated. All we can do is just cut loss. I mean, I didn't trade IWM, but if you did, that's all we can do is just cut loss and reposition. We got a false breakdown setup, so as long as above 184.5, I would stay bullish. I would stay bullish on IWM above 184.5. Breakout of 186 could trigger some upside, some more upside, and maybe go and retest 188. All right, we have some selling pressure around that zone. Below 184.5, we'll switch back to bearish, false recapture, or false breakout, however you want to call it. The point is we got to get back above below 184.5 to stay bearish. All right, otherwise maybe we'll chop, but you know, I'm gonna lean bullish because the trend is bullish since October, late October, and we recaptured a critical level. Bullish above 184.5, switch back to bearish below. Tesla has literally been saving my portfolio. I miss trading the SPY, but you know, it hasn't been treating me well. Let's go to a daily chart. Got this rising wedge here. You know, we bounced off of that level of that line as support again. I mean, it needs to show some follow through if we're gonna be bullish. Tested that support, found buying pressure. Great. I have Fibonacci level from July high down to October low. That fib level, 50% fib level is at 247. I need to see that breakout as well as the downtrend line. Breakout of the downtrend line is about 250. So 247, 250 are the levels that bulls need to clear to trigger a nice, beautiful move to the upside. Maybe test the top of this wedge around 257-ish. And I do have a fib level around 253.4-ish. Okay? I will turn bearish if this breaks down. It needs to break down 238.7-ish. Okay? 238, let's round it to 238.5, you know, keep it 0.5s and zeros. The point is, below 238.5, I would switch to bearish, okay? Because it's a breakdown of the wedge. I have fib level at 234.6, that strong buy zone around 231-ish. Those are the support levels to watch if we break down. But overall, it would be bearish if we can break down this pattern. Apple got a 1 hour chart here. Megaphone pattern. This was addressed in the Discord. If you guys are looking for, looking for pre-market analysis from certain stocks, definitely consider joining my Discord. But this is one of them that I covered. Megaphone pattern, you can see here, it just tested. It hit that megaphone pretty beautifully. 195 rejected. What are we going to do? So at least we know the level that needs to break out. If we're going to break out this megaphone pattern tomorrow, it needs to get above 195, 195.5-ish, because this thing slopes up. All right? To break out of the megaphone pattern bullishly. Now, I have support at 193 and 191.2. 191.2 is a fib level from July high, which is all-time high, down to October low. That's when I would turn bearish, below 191.2 for Apple, and I would favor more downside. Below 190, possibly even lower, down to the megaphone pattern. Megaphone pattern supports around 188.8-ish, so below 187. All right, guys. NVDA, it's been in a downtrend since November 21st. As you guys can see, I added some fib levels there. We managed to break out the 23.6 fib level, which was at 464. So as long as above 464, I would be bullish on NVDA. Got that downtrend line, and a test would be around 468.5-ish. A breakout, though, if we can break it out, definitely need to stay above 468.5-ish, and possibly the downtrend since November could possibly end, and we had a lot higher, okay? I would switch back to bearish below 464 and favor more downside. False breakout setup, and we're on a downtrend, all right? Amazon got some new fib levels, updated fib levels from September 14th high down to October 26th low, okay? So that fib level's at 145.9. Managed to get above that level. We break that down tomorrow, we could possibly drop back down lower, maybe down to 144, 142.7, and down to 140, all right? To be bullish for tomorrow, it got to break above 148. If it breaks above 148, we'll likely go test the top of the megaphone pattern at 151. All right, guys? But overall, 145.96 is our equilibrium level. Below it, bearish. Above it, bullish. AMD, holy moly. Uncle was bearish on it yesterday because, well, let me explain myself. We had this false breakout of the multi-year trend line. And then yesterday, we tested that multi-year trend line. It had some strong selling pressure, but dip buys came through, gapped it up, and it just kept on going. And guys, look, AMD broke out a multi-year trend line. Okay, it broke out a multi-year trend line, and breakout level is at what was that, 122.8-ish. As long as above 122.8, Uncle Charters is bullish on AMD. All right, bullish. We are in breakout mode. Bulls are in control. Now, next resistant, it was today's high at 128.68. We can round it to 0.7 to 129 zone. If that clears, 131 and 133 are in play. Okay, 132.83 was June high, but I think we can break it to 133. We'll see, but definitely bears will possibly be around it. You see these double tops and double bottoms lately. Okay, I can't get bearish on AMD unless this breakout gets invalidated. That means it needs to break below 120. Well, I got support at 124.3, but it needs to break below 122.5. We'll bring it down to 122.5, all right? 122.5, I would favor a false breakout setup on AMD, and that's when I would switch back to bearish, okay? Got a big bounce on Meta. It recaptured my multi-year fib levels. Remember, I got fib levels from all-time high down to, November 2022 low. We had the breakdown, but, recaptured right around 321. Okay, so as long as above 321, stay bullish on Meta. We can break out 326.2 and 330. That would be bullish for Meta. And we can test this downtrend line, which is around 335. Above 335, bottom is in. but watch out for a rejection there, okay? I will switch back to bearish below 321 for Meta. Not much movement on Netflix. Still needs to recapture 455 to be bullish. And if it wants more downside, it needs to break down two support levels, 148 and 145.7-ish. Break those down, we'll see more downside for Netflix. Above 155, I will switch back to bullish, all right? Google got a gap up and it went up higher. Recaptured 78.6 fib level, which is around 138. As long as above 138, bullish on Google, but I got a downtrend line here. If it can clear 140.5, possible bottom is in. It's a breakout mode. So I will switch back to bearish below 138 with 136.3 in play. And below that, we could possibly go fill the gap around 133-ish for Google, all right? TLT still bullish, although today it didn't show much follow through. It's still above the breakout level. Couldn't break out the next fib level around 96. All right, so the plan is still the same. Above 96, bounce continue or rally continues. All right. Below 94.5 is when I would switch back to bearish, and it would make this trend line a false breakout. Okay, so below 94.5 bearish, above 96 bullish. VIX, not a damn thing is happening, and I'm gonna move on. Here's Darkpool, guys. We had 1.4 billion in premium around 454.7. Could have been a buy, considering we had the gap up. We did get a lot of activity around the 458.3-ish level, okay? Multiple, all under a bill, 800 mil, 300 mil, 400 mil, but all combined, that's over a bill. 458.3. I definitely watched that level because the big money players are. They're getting busy. Some are buying, some are selling down there. Who knows? But they're getting busy down there. Option flow. It's bullish, guys. It's bullish. Is it going to show follow through tomorrow and cancel the double top? And triple Q is bullish. IWM is bullish. Okay, I think somebody got confused yesterday with how I'm talking about this. Yeah, this is the quantity of calls and puts. But, you know, not all the contracts have high premiums. Okay, so IWM has a higher quantity of calls and it's overall bullish. So that means more money went into calls and the quantity went into calls. Does that make sense? Like the premium of the calls were higher. Let me see if I can give you another example. Let's check Tesla. Okay, so quantity, the number of contracts bought is higher, and the money that went into it, the premiums, you know, the premiums, like some was 100K, some was 500K, all that heavy stuff, is also higher. It's also bullish. Let's see, Apple. Okay, Apple's bullish quantity and, you know, premium wise. Yep, bullish for NVDA. Okay, bearish for Amazon. Bullish for Microsoft. Higher volume and higher premium. Netflix. Bearish. GOOG. So straight up bullish. GOOG with the L. Okay, so here's perfect. Here's how I want to explain it. So you guys see here how it says full sentiment is bullish for Google with the L. However, there's a higher quantity in puts. So 22,000 in puts and over 10,000 in calls. However, when it comes to the amount of premium right here, the amount they paid for each contract, in total is 6.5 million for calls, while puts is 3.3 million. That's why it's the flow sentiment is bullish. Even though there's more put contracts, but more money went into calls. I hope that clarifies it for you guys. TLT, it's bullish. All right, let's check the VIX. VIX is bullish. All right, guys. Thank you guys so much for watching. I really appreciate it. Let's hope we get some action soon, guys. Anyways, good luck on the end of the week. Next week should be a great week with all the catalysts. And yeah, peace.